Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you for joining us here for this edition of our Market Carver. We got a few topics to talk to you about. We do think there's something significant going on here vis-a-vis elections, so we'll give you some more content there and some stats I think are important to keep in mind. And I'll start us off talking with something more boring, but we also think exciting when you understand the opportunity that's behind it. And that is in the Section 351 exchange, which sounds complicated, but I'll try to keep it simple. And we'll drive right in. So Section 351 exchange. Easiest way to think about this, many of you may be familiar with a 1031 exchange that's available for real estate. So a 1031, if you're unfamiliar, is where you have a piece of property. It could be farmland, office buildings, whatever it may be, that you bought many years ago and is appreciated in value, and you want to sell it, but don't necessarily want to have to pay the taxes on it because you intend to keep it invested in real estate. You just kind of want to exchange it and move on to a different type of a property. That's where a 1031 exchange comes into play. You can go from one property to another. If you jump through all the hoops and do all of the legwork correctly, you can do so in a tax-free manner. And the same thing is becoming available for stocks, and that is a 351. And so this is kind of really a kicking off as we speak with exchange traded funds who are launching and being funded through transfers from stocks as opposed to selling your stocks and buying the exchange traded fund. So a very similar application. You may have a stock that you've owned for a very, very long time. A lot of people around here, it might be Eli Lilly, it might be whatever company you work for, or just a handful of very successful stocks. So many different applications get you there, but there is going to be some great opportunities. And we have identified one that we're going to be using in a few select circumstances just like this in early December. And so we're able to take, again, some of these, a handful of stocks. Just like 1031, there are some restrictions and we've got to really have everything buttoned up and done correctly. But there is a potential to diversify away from really heavy concentrations on individual stock positions. Whereas before, just like the real estate, you may have wanted to diversify and move on, but not necessarily if it comes at a 15 or 20% tax hit. So something we're excited about, and we think will grow as we go through years and more opportunities to do this arise. So that's 351. I'll turn over to Andrew and cover some points around the elections.
All right, thank you, Adam. So as a reminder, we record this Market Carver on Tuesday, Election Day. So when you hit your inbox, we very well may know what the election results are. Hopefully we do. And if you've been an avid watcher of the Market Carver, this has been a topic that we'll hit on every few weeks, really discussing the market implications of the election and how there might be different trends or different sectors, or is there right ways to be invested or not invested. We've tried to approach it from every angle throughout the year to keep you as best informed as possible. Now, as we finally come into election week, now we shift focus, at least regarding this topic, regarding how does the market typically perform after an election. And so the first chart I want to share with you is looking at the stock market from two different angles. First, we have this chart here from where the blue line is looking at the average year of the stock market since 1984. So this is looking at a traditional roadmap. Notice that typically goes from the lower left to the upper right. Most years are positive with a little bit of volatility intermixed there. Then on the red line there, we have election years. You can see typically those are less strong performing years, a little bit more whipsawing around. Thankfully, this year has actually bucked that trend. We've actually had pretty low amount of volatility, only really 2 or 3 major or even really minor declines as the market has steadily been able to advance higher. Now, if we look to the far right side, we can see that dotted line where it says election day and see how the markets have performed specifically on that red line after that. Traditionally, we do have a little bit of a pullback into election day. We've seen a little bit of that this year, market off about 2 or 3%. And then after election day, we see a lot of that unease, a lot of that unknown has been taken out of the market. And we traditionally do see the market rally into the year end. And we see that both in traditionally any year of the market has always been pretty positive in November, December, but even more so in election years. Now, the big caveat here is this is not a requirement by any means. The market isn't required to go higher in election years in November, December, but it's good to see what's happened in the past. As history often repeats, or as Mark Twain said, it often rhymes. And so we want to know what traditionally happens in election years, and traditionally it's been pretty positive. Now, the next chart I want to share is just as important, and this is looking at a much longer time frame. It is looking at how the markets performed during different presidencies, whether Republican or Democrat. And the main takeaway here is you'll notice over a long period of time, the market traditionally goes higher, and it really doesn't care who the president is. We spend a lot of time, a lot of focus in America focusing on who will be president, and the stock market really is much more focused on earnings, on interest rates, and the supply and demand of the stocks that are being traded, less so who occupies the White House in Washington, D.C. And so we think while it's important the voting is important, who gets elected can be important, but as far as investing, and this is something we've shared from different points of view throughout the year, the market traditionally really doesn't have a large concern with who does get elected. We know that there's some people that show concern over each candidate being elected. And historically, the stock markets continue to go higher, whether it's been Republican or Democrat. The market experiences volatility, whether it's Republican or a Democrat. And so, as we exit this week, as we move into Thanksgiving time and Christmas and year end, and what I would like to think of much more encouraging topics to be discussed, that from the stock market perspective, we continue to stay focused on the things that really drive and impact stock and bond prices, and the data and the analytics and the quantitative research that we do to really manage the portfolio, looking at earnings, looking at supply and demand, watching interest rates, and really being focused on the hard data, and much less concerned with a lot of the other noise that's maybe going on in DC. And we hope that you will share that view with us and take a big sigh of relief as we exit election week and really get back to focusing on what truly matters and impactful to your journey to retirement or financial goals. And as we try to continue to be thankful that we get the opportunity to work with you on those.
Great. And I do hope that there's a large number of you that had the opportunity to click and open this week, because just listen to that, Andrew. That was just very well put for him. So I hope that really had as wide of a market, as an audience as possible. So we'll see that. But either way, we do appreciate it. And as always, we send you a reminder to give us a call. We can be a help, particularly on this 351 exchange. If you'd like to know a little bit more, just kind of one-on-one in your situation, if it would apply. Certainly, if you're a current family of ours, we're pouring through that on your behalf. But if not, please, by all means, reach out. We can do some analysis and see if it might be a good fit for you. 800-928-4001, or scan the QR code and do it electronically. So thanks again. Have a great weekend.